Qantas pushes to open up international borders to help boost the economy and its bottom line. A second booster shot for older Australians, and M&A activity kicks off for 2022 with a big deal in the property sector. It's Tuesday, the 1st of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Then stay listening for Sean's chat to EY's Tim Dring about the state of the banking sector in Australia. But first, Sean, Qantas boss Alan Joyce has come out firing, calling for Australia to reopen to international tourists as soon as possible.
He certainly is starting to sound a bit frustrated. Mr. Joyce said the current border policy made no sense and took a special swipe at Western Australian Premier Mark McGowan for keeping the state border closed. It comes after the Prime Minister Scott Morrison said borders should be opened by Easter, that's middle of April. Mr. Joyce, whose company has much to gain from a reopening obviously, said it didn't make sense to allow Australians to come in but not tourists. He pointed out that there were a lot more COVID cases in Australia than many of the destinations Qantas flies to, and he's also called for an easing of testing requirements. Pressure is certainly growing on the government to take a more lenient approach to travel. On the economic front, the loss of foreign students and travellers have contributed to a very tight labour market and helped undermine the higher education sector. Cafes, restaurants and venues in particular are really struggling to find staff at the moment. Regional cities such as Cairns have been disproportionately hit by the border closures, that's the international border closures. And for foreigners looking to take holidays this northern summer, the restrictions in place make Australia a far less attractive option than other parts of the world. Mr. Joyce said his company had become much smaller because of the virus. In fact, Qantas has lost $20 billion in revenue due to COVID. But the ever-optimistic Mr. Joyce says travel demand is returning in the wake of the Omicron outbreak. Hopefully, the next few months will mark a return to widespread international travel, while some sectors, cruising being the best example, will have to wait. The signs are there that the international borders will reopen soon. That, of course, Michael, is assuming no major outbreak of a new variant of COVID.
And that is a fair assumption to make, isn't it? Now, Sean, how did equity markets perform yesterday?
Well, it was relatively sedate, certainly compared to the last few weeks. The S&P ASX 200 index was down just a touch to 6,972 points. The tech stocks did well, continuing their remarkable turnaround, while the financials, including the big banks, were sold off. Of course, Michael, it's a very big day today for financial markets with the Reserve Bank board meeting. Its regular statement is due out at 2:30 p.m. this afternoon, and economists and investors are watching for changes in wording that suggests the bank might move on interest rates later this year or early in 2023.
Yeah, and we'll have the latest this afternoon in our afternoon report and an interview tomorrow as well, having a bit of a closer look at it all. How about international markets overnight, Sean? How do they perform?
Well, Michael, Wall Street did well overnight, led by tech stocks. In early afternoon trading, the tech-heavy Nasdaq is up by more than 2%, while the broader S&P 500 is more than 1% higher. The Nasdaq is now up 5% since its lows last Thursday. European markets were mixed, and while markets in mainland China were closed yesterday for the Lunar New Year holidays, there's some optimism around the place that the worst of the crackdowns on businesses from Beijing might be over. That helped boost Hong Kong shares and particularly tech stocks. We'll have to wait and see on that one, I think.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty to talk about today. Relations between the states and federal government remain pretty frosty, even when they come from the same side of politics. New South Wales is in the midst of a full-on spat with Canberra over support payments.
Sure is. New South Wales Treasurer Matt Keane, with the support of his Premier Dominic Perrottet, has warned that his state's economy could contract by up to 4% if COVID infections continue to rise. The state government outlined a $1 billion package over the weekend to help small businesses and called on the federal government to do more. But Federal Treasurer Josh Frydenberg yesterday said the government couldn't keep spending money to support business, noting that South Australia had outlined a small business support package last week without asking for federal help. Mind you, that package was about 1/20th the size of the New South Wales package. It's going to be a very tricky time for governments, particularly the feds, who face an election in the next 4 months, weaning households and businesses off government support packages.
And just staying on COVID news as well, Sean, the federal government is considering rolling out fourth doses of a vaccine.
Yes, Federal Health Minister Greg Hunt said health authorities are considering whether older Australians should be given a second booster dose as part of the COVID-19 vaccination program. At the moment, only immunocompromised Australians are eligible, but with a disproportionate number of older Australians dying from COVID, the government is thinking about expanding the fourth shot. Now, case numbers across the country continue to fall, notwithstanding there are still far too many deaths. In New South Wales yesterday, there were 13,000 cases, 10,000 in Victoria, 7,500 in Queensland, 1,500 in South Australia, and the ACT recorded more than 500 cases yesterday.
It certainly seems to be heading in the right direction, but of course kids are now returning to school, so preparing for a bit of a spike, but hopefully the trend continues in the right direction.
Yes, that's true. And even if there is a surge because school kids are catching it, they're less likely to be badly affected as older Australians.
Yeah, that's right. Now, Sean, Victoria outlined details of a proposed 3-kilometre third runway at Melbourne Airport yesterday.
Sure did. The north-south runway could increase capacity by about 40%. With around 136,000 more takeoffs and landings each year. The cost of the project is just shy of $2 billion, and it's forecast to create 37,000 jobs for the state. Now, plans for the runway were released yesterday. If all goes to plan, and let's face it, that rarely happens, building could begin next year for the first flights in 2027. Melbourne Airport currently has 2 runways that run across each other. It causes congestion and delays at peak times, particularly when winds aren't blowing in the right direction. Of course, a second international airport at Sydney is currently being built, with its first flights due in 2026.
Yeah, and that one's only taken about, 60-odd years, I think?
I think so, yeah, about that.
Yeah, that's progress. Now, Sean, Anastasia Palaszczuk has ordered a state-based royal commission into the powers and structure of the Crime and Corruption Commission in Queensland, and the head of the inquiry is a pretty familiar name.
Sure is. It's Tony Fitzgerald who uncovered systemic corruption in the state 35 years ago that eventually led to the creation of the commission that he's now inquiring into. He'll head the inquest. Now, Mr Fitzgerald's inquiry back in the 1980s led to the eventual resignation of then Premier Joe Bjelke-Petersen and the jailing of several ministers and a police commissioner. The new inquiry is relatively narrow in scope, certainly much narrower than many critics of Ms Palaszczuk wanted. It will look into the CCC's investigatory and charging functions and the role of seconded police officers. There'll be plenty of news around that, but certainly asking Tony Fitzgerald to do something about it means the Premier is serious.
Yeah, it certainly grabs a headline, that's for sure. Now, I mentioned at the top of the show, Sean, the property deal that has kind of kickstarted M&A activity for the year, at least for that sector. Property funds manager Charter Hall has bid almost $1.3 billion for office and industrial landlord Irongate Group.
Yes, it continues a run of M&A activity in the market. What I find interesting about this deal, though, and what's happening in commercial property more generally, is how popular office buildings are. I get the popularity of industrial space. The boom in online buying's meant a boom in logistics and the need for big warehouses to sort and fulfill online orders. But given the shift to hybrid working, and in some cases people just working from home, not even going into the office, the demand for office space by these big investors has held up pretty well. Clearly, buyers don't think the pandemic-induced work-from-home trend will continue forever and people will get back into the CBDs. But the office space that's doing best is not just that with strong environmental credentials. That's what it used to be. They also need to rate highly on a well-being index, so end-of-trip facilities, somewhere where you can shower and leave your bike. They're very popular. Natural light is really important. Configurations of office furniture and space that better allows for collaboration attracts a premium as well. Charter Hall's been building consortiums to invest in commercial property market for a while now, and particularly that sort of commercial property. Irongate's board said it's looking at the offer, and the Real Estate Investment Trust share price jumped 17% yesterday.
Okay. Treasurer Josh Frydenberg is under fire for legislation due to be introduced into Parliament this month, Sean, that puts a much greater onus on proxy advisors to explain why they voted in certain ways in AGMs.
It sure is. Now, stay with me on this one, Michael, because it is really important, but it's a bit technical.
Hang on. It is never a good sign when you tell me I need to stay with you, but
I know your concentration span.
It's very, very limited, but please go on.
Well, look, proxy advisors are the groups who give independent advice on how to vote at AGMs, and they're used very heavily by industry super groups. It might be about how much a CEO is paid. Should you vote for or against that, or who should be on the board? They're very, very powerful and not always a friend of big businesses. Now, Mr. Frydenberg announced changes last year that would force the proxy advisors to provide much more information in a much more timely manner to companies about what they were going to advise. The draft legislation says that these proxy groups should provide notes about verbal discussions on issues, but according to a Senate committee, the legislation is vague, inconsistent, and the proposed penalties of up to $11 million are unjustified. Now, Michael, there are actually only 4 main proxy advisory firms, but they have enormous power. This fight is pretty much pitting the government and big business against Labor and the big industry superannuation funds. It's as much about that as it is about the proxy advisory firms. It will get plenty of airplay in the next few weeks. So I hope I've given you a good enough explanation to understand what we're talking about.
I think I followed you the entire way through that. Well done.
Thank you.
Okay, Sean, what's making headlines in today's news media?
Well, the Financial Review is reporting that the Morrison government will dedicate $2 billion towards commercialising ideas in priority areas of the economy and will also promise up to $800 in incentive bonuses for aged care staff as it tackles challenges posed by COVID-19. The Australian is reporting that Australia's new $45 billion Hunter-class frigates will be substantially slower, have a shorter range than originally intended, and could be vulnerable to detection by enemy vessels. That's according to a classified Defence Department report. And there's more from the news poll, which of course appears in the Australian. A majority of voters, 52%, are resigned to another year of COVID-19 disruption to their lives. I know how they're feeling, but generally remain upbeat about Australia's overall future, believing the pandemic is better managed here than in most other countries.
All right, just running through some of the other stories around today. It was a tough day for gloves and protective clothing maker Ansell. It cut its earnings guidance by 25% as demand for its products slowed and supply chain disruptions hit the bottom line. Its share price initially tumbled 24% before closing down 13%. Ansell's share price has, not surprisingly, done very well during the pandemic, but is now back to late 2019 levels.
At the other end of the spectrum, it was a very good session yesterday for four-wheel drive accessories business ARB, which said revenue for the 6 months to the end of December was up 27%. Not COVID, nor the supply chain delays in the automobile industry has been able to dampen the group's earnings. Its share price ended up more than 8%.
Origin Energy has had a tough couple of years, but yesterday said it's been able to capitalise on higher oil and gas prices. Revenue from its integrated gas business jumped by a third during the December quarter. Not too bad.
Not bad at all. And finally, a couple of the big fund managers are planning to merge. VGI Partners and Regal Funds Management want to create an alternative investment strategies business with more than $6 billion in assets.
Question without notice, Sean. What is an alternative investment strategies business?
Well, you think about normal investments like equities and bonds and fixed income. Definition of alternative changes between different fund managers, but often it might be infrastructure debt or it might be different types of real estate. It's just sort of a little bit out of the norm. Private equity is an alternative investment strategy. It's that type of thing.
Okay, it's only Tuesday and I've already learnt my fact for the week. Thank you very much.
Not at all.
Now, what's the key overseas news this morning?
The Taliban have killed dozens of former Afghan officials, security forces and individuals who worked with international troops since the militant group took over the country in mid-August, according to the Associated Press. Referring to a United Nations report, Associated Press said of the more than 100 killings identified, 2/3 were committed extrajudicially by the Taliban and affiliates despite a general amnesty. Very sad news. Yesterday marked the second anniversary of Brexit, and United Kingdom Prime Minister Boris Johnson announced legislation to try and scrap a bunch of European Union laws left over from the decision to exit the continent. In short, the UK will be better able to scrap EU laws, hopefully reducing the mountain of bureaucracy that's emerged over the past couple of years. And finally, an update of global COVID numbers. We forget the big picture sometimes, but as we enter the third year of the virus, more than 374 million people have been infected with COVID, and the virus has killed more than 5.6 million people globally, according to Bloomberg. The US has recorded more than 74 million cases, followed by India with 41 million cases and Brazil with 25 million cases. The US has had the most deaths, 884,000, while Brazil is next at 627,000, followed by India with almost 500,000 deaths.
Just extraordinary numbers, aren't they?
Sure are.
All right, now, Sean, up next is the Fear and Greed Daily interview, and today you're speaking to Tim Dring from EY.
Yes, we're talking about banks. It's an interesting sector at the moment. They're facing rising interest rates, much more competition, and often not from other banks, but from other tech companies. And they're stuck with some pretty big legacy systems, which aren't very flexible. Tim knows all about it. Great conversation.
Yeah, he knows that space so well. It really is interesting. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 1st of February, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.